New Jersey, 1963. Massive industrial tanks stretching toward the horizon. Inside, millions of dollars in liquid gold. Everything looked perfect. Top banks trusted one man. Inspectors signed the papers. The world's most powerful financial institutions were betting big on this inventory. Until one day, someone opened a tank and discovered a secret that shook Wall Street. In the early 60s, commodity trading was booming. At the center of it was Anthony Tino the Angelis. Confident, charismatic, and convincing. He ran the Allied Crude Vegetable Oil Company. His business was simple, soybean oil, and his pitch to the bank was even simpler. I have massive reserves of salad oil. I just need loans to move it. Banks looked at the numbers. They looked at the tanks. Why wouldn't they believe him? There were official inspection reports. There were warehouse receipts. There were massive steel containers filled to the brim. But the Angelis knew something the bankers didn't. He knew a simple rule of science. Oil is lighter than water. It floats. He filled the storage tanks mostly with cheap salt water, then added a thin layer of soybean oil on top. When inspectors checked, they saw oil. They smelled oil and assumed everything below was oil too. No one checked deeper. No one imagined the truth. On paper, the Angelis looked like a titan. Inventory was high. Assets were huge. Loans were easy. Banks handed over around $150 million at the time. Over $1 billion in today's terms. All backed by an illusion. But a lie that big doesn't stay hidden forever. Eventually, the numbers stopped adding up. During a deeper investigation, this time, someone didn't just check the surface. They tested what was below, and the truth came out. A huge portion of claimed oil inventory simply didn't exist. Panic spread instantly. The salad oil scandal hit the Wall Street hard. The Angelis went to prison, but the damage was already done. One of the biggest victims, American Express. They had backed many of those warehouse receipts. Now they were exposed to massive losses. The stock didn't just fall, it lost roughly half its value in weeks. While the world saw disaster, a young investor in Omaha saw something else. A 33-year-old Warren Buffett noticed something unusual. Even as the stock was crashing, the business itself wasn't. People were still using American Express cards. Travelers were still buying travelers' checks. The brand was intact. Only the investor confidence was broken. So Buffett made a bold move. He invested heavily, putting around 40% of his partnership's capital into American Express. While others were running away, he was buying. 5 years later, the investment had multiplied several times over. What started as one of the biggest financial frauds in 1960s became one of the most famous investment opportunities in history. And stories like this are a reminder. Sometimes the biggest opportunities hide inside the biggest fear. If you are interested in understanding market through real stories, hidden risks, and opportunities most investors miss, you will probably find this channel useful. Because here, we don't just look at the numbers. We try to understand what's actually behind them. Subscribe, because in the world of finance, some people see oil and a few see gold when everything crashes.